Welcome back to the deep dive. It is late January 2026. I want you to take a second and just, look around the landscape of modern medicine.
Hmm.
For decades, robotic surgery was this, futuristic promise. It was the stuff of sci-fi movies, machines doing the work of humans.
Right. It was always 10 years away.
Always 10 years away. But we aren't waiting for the future anymore. It's fundamentally here.
It's not just here. It's become mundane.
Yeah.
And I mean that in the best possible way.
Yeah.
It's become the furniture in the operating room.
Right. It's the standard of care. I was looking at the numbers from Intuitive Surgical, the company behind the famous Da Vinci robot, and the scale is it's hard to wrap your head around.
It really is.
Since they started back in 1997, they have treated over 20 million patients globally.
20 million. To give you a sense of scale, that's roughly the entire population of New York State, all treated at some point by a robot.
And the curve is going vertical. We aren't talking about a slow, steady climb. Just last year, in 2025, they did 3.1 million procedures.
3.1 million in a single calendar year.
That is a staggering amount of people going under the robotic knife.
It creates this fascinating psychological shift, doesn't it?
Yeah.
I mean, 10, maybe 15 years ago, if a doctor said a robot is going to operate on you, a patient might hesitate.
Well, for sure. You'd be asking a lot of questions.
You'd ask, is it safe? Is the doctor even in the room? But today, the question has completely flipped.
How so?
Now, patients are the ones asking, wait, you're not using the robot. Why not? It's become the benchmark for precision and for minimally invasive care.
Exactly. And that shift in consumer expectation is part of what we're digging into today. But we aren't just here to geek out over the cool mechanical arms.
Although we are definitely going to do some of that.
Oh, we have to. The new tech is wild.
Yeah.
But the real mission of this deep dive is an investigative report. We are tearing apart the business model of Intuitive Surgical. The ticker is ISRG. We've combed through the earnings call transcript from January 22nd, so that's literally just a few days ago. We've got the FDA clearance reports, the investor decks, all of it.
And we're looking to answer one specific and, I think, slightly terrifying question, at least for their competitors.
Which is?
How does a company that already has an 80% market share keep growing?
Right. I mean, by all the laws of economics, they should be hitting a ceiling. They're the monopoly. Pretty much everyone who wants a robot basically has one by now.
I think so.
And yet the stock is flying, and the growth is actually accelerating in some areas.
It's because they've managed to change the definition of the market. It's a classic case study. They aren't just selling a box anymore. They are building a fortress.
A fortress made of, recurring revenue, data, and this new platform called the Da Vinci 5. So buckle up. We are going to look at the engine of this machine, the new tech that claims, and this is a crazy number, 10,000 times the computing power of the old one.
An almost unbelievable number.
And the moats they've dug to keep cheap competitors from storming the castle.
And trust me, the business strategy here is just as precise and just as impressive as the surgery itself.
Let's start with the money, the engine. Because I think casual observers look at Intuitive Surgical and think, oh, they sell those million-dollar robots, and they do. But when you look at the Q4 2025 earnings, that is not where the real money is.
It's not even close.
Yeah.
It's a common misconception. If they stop selling robots tomorrow, just never sold another single system, they would still be an incredibly profitable, growing company.
This is the classic razor blade model, but I feel like that term gets thrown around too loosely, in business school.
Oh, all the time.
People say Nespresso is razor blade or HP printers.
But this is different. This is that model on, steroids. With a printer, you can go to a third-party store. You can buy knockoff ink.
Right. It might clog the printer, but you have the option.
You have the option. With Intuitive, the ecosystem is hermetically sealed. It is the absolute law. There are no third-party options.
So let's look at the aha stat that really blew my mind from the Q4 report. In the fourth quarter of 2025, 81% of Intuitive's total revenue was recurring.
81%. Just let that number sink in. That is a software company number. That's what you expect from Microsoft or Adobe, not a hardware manufacturer.
It's incredible. So explain to me how that works physically. The hospital buys the robot, the Da Vinci system, that's the razor.
Right.
And that costs, $1.5 million?
The average selling price, or ASP, for Da Vinci system is currently about $1.68 million. Wow. So it's a heavy capital expenditure. A hospital board has to meet, they have to vote, they have to sign a massive check for that. It's a big event.
Okay, so the robot is parked in the operating room. It's massive. It's got these 4 arms. It looks like a giant sterile spider. Where is the 81% recurring revenue coming from?
It's coming from two main places. First, service contracts. To have a service contract, it's a few $100,000 a year.
Right.
But the real cash cow is the instruments and accessories line item. They call it INA. In 2025, that single segment brought in $6.02 billion.
$6 billion just on the, what are we talking about?
Yeah.
The little scissors, the grass?
Scissors, the graspers, the staplers, the energy devices, even the sterile drapes that cover the robot. But here's the kicker, and this is the core of the whole model. These instruments are smart.
What do you mean smart?
They have microchips in them. When a surgical tech plugs a grasper into the Da Vinci arm, the system reads the chip. It knows exactly what instrument it is. It knows the serial number. And most importantly, it knows how many times it has been used.
Ah, I see where this is going. There's a counter.
There's a counter. Most of these instruments are rated for a specific number of lives, usually 10, or in some cases for complex tools like staplers, they are single use.
And once that counter hits 0,
the robot physically will not let you use that instrument again. The console will flash a message. Instrument life expired. It locks it out. You cannot override it.
so you can't just, send it down to the basement to be sterilized and put it back in the tray for the next surgery.
You can sterilize it all you want, but the robot won't recognize it. It says expired. So the hospital has to throw it away and buy a new one from Intuitive.
That is, well, from a shareholder perspective, that is absolute genius. From a hospital administrator's perspective, that sounds incredibly expensive.
It is. I looked at the unit economics from their investor day. For every single Da Vinci procedure performed, doesn't matter if it's a prostatectomy or a hernia repair, Intuitive generates approximately $8,850 in instrument revenue.
Hold on, just let that sink in for a second. The hospital paid nearly $2 million for the robot.
Yeah.
And now, every single time a patient rolls into that room, they are writing another check, basically, for almost $2,000 to Intuitive.
That's the model.
Yeah.
And that's just an average. If you look at their new lung platform, Ion, which we'll definitely get into later, it's even higher. It's around $2,200 per procedure.
So this creates a massive, massive incentive for Intuitive, doesn't it? They don't really care about selling the box as much as they care about the box being busy.
Precisely. That's the key insight. If I'm an Intuitive sales rep, my job isn't just to drop off the robot and leave. That's only the beginning. My real job is to make sure your surgeons are trained, that your OR schedule is packed, and that the robot is running morning, noon, and night.
Because an idle robot generates 0 recurring revenue.
Exactly. An idle robot is a dead asset to them. A busy robot is a gold mine that just keeps pumping out cash, procedure after procedure.
And this explains why the revenue is so predictable, why Wall Street loves it so much. It's not lumpy capital sales.
It's the compounder part of our title. You have the installed base, all the thousands of robots sold over the last decade, generating that steady, predictable stream of cash from instruments. And then every new robot you sell just adds another layer to that stream. It just stacks and stacks and stacks.
I noticed something else in the data regarding how they are getting these robots into hospitals. The system's revenue is still growing. It was, $786 million in Q4, up 20%, but the nature of the deal is changing.
You're looking at the lease rates?
Yeah, 47% of placements in Q4 releases, almost half. That seems counterintuitive. Why would Intuitive want to lease them instead of selling them outright? Don't they want that big, upfront $1.7 million check?
Not necessarily. Remember, their balance sheet is pristine. They ended 2025 with $9 billion in cash and 0 debt. They don't need the money today.
Okay, so they can afford to wait.
They can afford to play the long game. Leasing does two very smart things for them. First, it lowers the barrier to entry for the customer.
Right. If I'm a smaller community hospital, or maybe a hospital in a developing market like Eastern Europe, coming up with $1.7 million in cash is hard. It's a huge capital budget request.
Exactly. It stalls the deal for a year, maybe 2. But if Intuitive comes in and says, hey, just pay us a monthly fee, we'll put the robot in today, the CFO can sign that much faster. It moves the expense from a capital expense, CapEx, to an operating expense, or OpEx.
And for Intuitive, the moment that robot is in the door, it starts the flow of that sweet, sweet $1,850 per procedure.
Correct. It gets the flywheel spinning faster. But the second thing it does is it accelerates the upgrade cycle.
How so?
If you buy the robot outright, you're probably going to keep it for 7 to 10 years. You want to sweat that asset, get your money's worth?
Of course.
If you lease it for, say, 3 or 4 years, when that lease is up, Intuitive can come right back in and say, hey, your lease is ending on the Da Vinci sheet. Let's trade that in and get you into the brand new Da Vinci 5.
Which keeps the technology fresh, keeps the surgeons happy, and most importantly, locks the competitor out for another full cycle.
It's a flywheel, a very expensive, very high-margin flywheel. And it's getting faster.
Speaking of the new model, let's move to the shiny object.
Yeah.
The reason everyone is buzzing about Intuitive right now, the Da Vinci 5.
The DV5.
This is the new flagship system. And reading the specs, it really feels like they didn't just iterate on the old one. It feels like they jumped a generation.
It's a platform shift, not just an upgrade.
The headline stat that they keep repeating is 10,000 times the computing power of the previous model, SG.
10,000 times.
Okay, be honest. Is that real? Or is that just like marketing fluff? Does a surgeon actually need that much processing power to, cut a piece of tissue?
It sounds like complete overkill, doesn't it? It sounds like putting a supercomputer in a car just to listen to the radio.
Exactly.
But you have to understand what the robot is actually doing with all that power. In the old model, the SHI, it was mostly a direct translation. You moved your hand 1 inch, the robot tip moved, a few millimeters. It was a one-to-one filtered movement.
Sure. Simple mechanics, basically.
The DV5 is doing so much more in the background. It's processing a massive, and I mean a massive amount of sensor data in real time. It's running complex algorithms to filter out tremors with more precision, to predict movement, and most importantly, to enable the new force feedback system.
Okay, let's drill into force feedback, because to me, this sounds like the holy grail of robotic surgery that people have been talking about for 20 years.
It is. It absolutely is. For 25 years, the single biggest criticism of robotic surgery from the old school open surgeons was the lack of haptics.
Haptics meaning the sense of touch.
Exactly. In open surgery, if I'm stitching a delicate blood vessel, I can feel the tension in the thread. My fingers tell me if I pull too hard, it will snap or it will tear the tissue.
You have that tactile feedback.
You have that feedback. With the robot, until now, you were numb. You had to rely entirely on vision. You had to look at the screen and say, okay, the tissue is turning a little white. That probably means I'm pulling too hard.
So you were operating by sight, but you were essentially flying blind when it came to touch.
That's a perfect analogy. The DV5 changes that entire paradigm. It has incredibly sensitive sensors in the instruments that measure the force being applied to the tissue in multiple vectors.
Okay.
But here is the hard part, and this is why they need 10,000x the computing power. They have to filter out all the noise. They have to filter out the friction of the robot arm itself.
Oh, that's interesting. So the robot arm has its own weight and resistance and friction in its joints.
A huge amount. If you just transmitted all the force from the tip back to the surgeon's hands, it would feel heavy and clunky and confusing. You'd be feeling the robot more than the patient.
It'd be like trying to listen to a whisper in a noisy factory.
Exactly. So the computer has to, in real time, subtract the weight of the robot, subtract the friction of the joints, and isolate only the pure force of the tissue pushing against the instrument tip. And it has to do that with zero perceptible latency.
Because if there's a delay, if you feel the snap a split second after it actually happens, it's too late. The damage is done.
It's completely useless. That calculation has to happen instantly. That is what all that computing power is for. It's for a real-time, physics-based simulation of touch.
And does it work? I mean, what are surgeons who have used it saying?
The feedback has been incredibly positive. We are seeing early data and hearing surgeons say they can perform more delicate tasks with much more confidence. They're breaking fewer sutures. They are causing less trauma to the tissue because they aren't accidentally pulling or pushing too hard.
And the adoption numbers seem to back that up. I saw in the Q4 2025 report, 56% of all new systems placed were Da Vinci 5s. 303 units in 1 quarter.
That is a remarkably fast ramp-up for a new medical device, especially one this expensive. Usually, hospitals are very conservative. They want to wait a year, wait for the Service Pack 1 update,
They don't want to be the guinea pigs for the new model.
Exactly. But here, the value proposition is so strong that they're jumping in immediately. The demand is outstripping their ability to manufacture them right now.
Is it just the force feedback, though? Or is there a cold, hard business case for the DV5 too? Because I can't imagine a hospital CFO is authorizing a $2 million purchase because the haptics feel cool.
You're absolutely right. The CFO doesn't care about feeling the tissue. The CFO cares about efficiency, throughput, and the bottom line. And this is the second major selling point of the DV5. It just makes the surgery faster and more efficient.
Okay, how much faster? Do we have data on that?
We do. The data from the earnings call, and they were very proud of this, showed that in the U.S., DV5 utilization is 11% higher than the older SHI model.
11% higher utilization. So break that down for me. What does that mean in practical terms? Does it mean they can squeeze more surgeries into a single day?
That's exactly what it means. Think about an operating room. It is one of the most expensive pieces of real estate in the world to run per minute. You have surgeon, an anesthesiologist, multiple nurses, surgical techs. The overhead is massive.
We're talking thousands and thousands of dollars an hour.
Right, so if the DV5 has features that streamline the workflow allowing the surgeon to adjust the patient's table settings from the console without having to scrub out, or faster instrument changes, or a more ergonomic setup.
You save a few minutes here, a few minutes there.
And if you save, say, 15 minutes per case,
Mm-hmm.
and you do 4 cases a day, that's an hour you've saved. That's enough time to potentially squeeze in a 5th case.
And that 5th case is basically pure profit for the hospital because the fixed costs for the day are already covered.
Exactly. That is the efficiency argument in a nutshell. That is the slide in the sales deck for the CFO. The robot pays for itself by increasing the throughput and profitability of the hospital's most valuable asset, the OR.
It also maximizes surgeon autonomy. I read that the console is designed so the surgeon can do more tasks that used to require a nurse to come over and adjust something.
Which is crucial right now because, as you know, there is a global shortage of OR-trained nursing staff. It's a huge bottleneck.
Mm-hmm.
If the robot allows the surgeon to be more independent and require less assistance, that alleviates a major pain point for the entire system.
And just to put a cherry on top of this whole DV5 story, we got breaking news in January of 2026. The FDA gave them a new clearance.
A big one. This is a long-term play, but it's very significant. They got clearance for cardiac procedures, specifically for mitral valve repair.
Cardiac surgery has been sort of the final frontier for robotics, hasn't it? It's been tried before, but never really took off.
It has, for obvious reasons. The heart is, constantly moving, for one thing, and the stakes are incredibly high. There is zero room for error.
But the market is huge if they can crack it.
The addressable market is something like 160,000 procedures a year in the U.S. alone. Right now, robotics is only doing about 17,000 of those, so it's a tiny fraction.
So they have barely scratched the surface.
With the enhanced precision of the DV5, the tremor filtering, and now the force feedback, allowing surgeons to feel the delicate valve tissues, Intuitive is betting they can finally crack that market wide open. It gives them a brand new runway for growth for the next decade.
So, okay, we've got the recurring revenue machine, which is just humming along. We've got the new supercomputer robot, the DB5, driving upgrades and efficiency. But I think if we stopped there, we'd be missing the most explosive part of the company.
We need to talk about what's happening beyond general surgery.
The high-growth engines, as they call them.
Let's start with the ION platform.
ION is fascinating because it solves a totally different clinical problem. The Da Vinci is about surgery. It's about cutting and sewing. ION is about diagnostics. It's about finding a needle in a haystack deep inside the lung.
Let's walk through the patient journey here, because I think it's important to understand why this product even needs to exist. Lung cancer is the biggest cancer killer, right? More than breast, prostate, and colon combined.
By far. And the absolute tragedy of lung cancer is that the 5-year survival rate is only about 25%. And the reason is simple. We usually find it way too late.
Why? With all our modern scanning tech, why can't we find it earlier?
Because the lungs are an incredibly complex branching structure. They're a maze of tiny airways. If a radiologist sees a suspicious little spot, a nodule on a CT scan, it's often deep in the periphery of the lung, where the airways are just millimeters wide.
And historically, we couldn't get a tool out there to take a sample. Exactly.
Yeah.
So what would happen, the default was watchful waiting. You tell the patient, hey, you have a spot in your lung. We don't know what it is. It might be nothing. It might be cancer. Come back in 6 months and we'll scan you again to see if it grew.
That sounds like psychological torture for the patient.
It is absolute torture. And if it is cancer, you just gave it 6 months to grow and potentially metastasize.
Yeah.
The other options weren't great either. You can try a needle biopsy through the chest wall, but that has a high rate of collapsing the lung, a pneumothorax.
And a traditional bronchoscope.
It's like trying to drive a bus down a bicycle path. It's too thick and clumsy to get to the outer edges of the lung.
Enter ION.
Enter ION. It's a robotic catheter. It's ultra thin, it's ultra flexible. The doctor sits at a console and drives it with a controller, navigating through the airways of the lung, which are mapped out from the CT scan. It's like a video game.
So it can get to these hard-to-reach spots.
It can turn 180 degrees on a dime. It can snake its way all the way out to the edge of the lung where that tiny nodule is, and then a needle comes out and takes a precise biopsy.
And the growth numbers here are just wild. Procedures grew 51% in 2025. They did over 140,000 biopsies last year.
51% growth is hypergrowth. That tells you there's a massive, massive unmet clinical need that is finally being addressed.
But the vision here, from what I read in their presentations, is even bigger than just getting a better biopsy. Intuitive talks about a North Star. They want to compress the timeline from diagnosis to treatment.
This is the most compelling narrative in the whole company right now, in my opinion. As we said, currently, the average time from spotting a suspicious nodule to actually getting treatment is around 200 days.
7 months. An eternity.
7 months of anxiety, appointments, referrals, waiting for biopsy results, scheduling surgery. It's a broken, fragmented system. Intuitive's goal is to bring that down to under 1 month.
How is that even possible? How do they do that?
By integrating everything into a single event. They call it diagnose and treat. Imagine this workflow. You, the patient, go into the OR. The Ion robot navigates out to the nodule. It takes a sample.
Okay.
Right there in the room, a pathologist uses a digital microscope, a technology that Intuitive is integrating to look at the cells. It's called ROSE, Rapid On-Site Evaluation. And they can say, yes, that is cancer.
So you get the diagnosis immediately, no more waiting a week for the lab results.
Exactly. And then, and this is the future state they're building towards, you don't wake the patient up. You switch tools, you send an ablation probe down the same catheter that's already in place, and you use microwave or radiofrequency energy to burn the tumor out right then and there.
Wow. Gone.
Gone. Or you inject a focal drug therapy directly into the tumor, the patient wakes up, and it's done. Diagnosis and treatment in a single afternoon.
That completely changes the definition of cancer care. You aren't just a robotics company at that point. You're an oncology logistics company.
That's a great way to put it. You are selling time. And for a cancer patient, time is the only currency that matters.
Now, I have to play the skeptic for just a second here. I did see in the Q4 numbers that Ion placements, selling the actual boxes, slowed down a bit. They placed 42 systems compared to 69 in the same quarter last year. Is the market getting saturated?
It's a fair question, and it's something analysts on the call asked about, but I don't think it's saturation. It's a strategic shift in focus.
Okay.
They have now placed about 1,000 of these robots globally. That's a significant installed base. Now the priority needs to shift from just selling more boxes to making sure the hospitals are actually using the ones they have.
Right. It's the recurring revenue thing again, the $2,200 per procedure.
Exactly. There's no point in selling a box if it just sits in a closet.
Yeah.
So Intuitive is pivoting their sales and clinical teams to focus on utilization, on teaching more doctors how to use it, on getting the referral network set up so the pulmonologists are sending patients to the Ion suites.
And the proof is in the pudding. Procedure growth is up 51%, which tells me that strategy is working. The robots they have are getting a lot busier.
Precisely. They're focusing on depth, not just breadth.
Okay, so that's the lungs. Now let's talk about what they call the hidden gem, the Da Vinci SP, the single-port robot.
The SP is the sleeper hit of 2025.
Yeah.
The growth there is just phenomenal.
So explain the difference for us. The standard Da Vinci has 4 separate arms that come in through 4 different small cuts in your belly.
Right. It's a multi-port system. The SP has one single tube, it's about 1 inch wide, that enters the body through one incision. And then once it's inside, 3 fully articulating arms and a camera unfold from that tube, like some kind of, sci-fi Swiss Army knife.
That is insane engineering.
It really is. And what it allows you to do is perform complex surgery through a single tiny incision, or even better, through a natural orifice.
Like through the mouth.
Exactly. Transdermal surgery. You can go down the throat and relieve a tumor from the base of the tongue or the vocal cords without making any cuts on the patient's face or neck at all. The recovery is faster. The scarring is non-existent.
And the procedure growth here was even higher than Ion. It surged 87% in 2025.
It's finally reaching an inflection point. For a long time, SP was kind of niche. It was mostly used for a few specific urology procedures. But now they're getting new FDA clearances for soft tissue applications.
I saw nipple-sparing mastectomy on the list of new indications.
This is a huge deal, a game changer for breast cancer patients. Traditional breast cancer surgery can often leave significant scarring and deformity. With the SP, a surgeon can make a small hidden incision, maybe in the armpit, and then tunnel under the skin, remove all the breast tissue, and leave the skin and nipple perfectly intact for reconstruction. The cosmetic outcome is just night and day.
And thoracic surgery too, right? Going between the ribs without having to spread them apart?
Right. Taking lung biopsies or doing other procedures in the chest cavity, it's opening up these anatomical soft tissue markets that the big, bulky, multi-port robot just couldn't touch. The SP can work in a space the size of a phone booth.
So, okay, we have this incredible lineup. The workhorse DV5, the high-growth ion for lungs, the niche-busting SP. But Intuitive isn't operating in a vacuum anymore. For 20 years, they were basically the only game in town.
Right.
Now the sharks are circling. You have Medtronic with their Hugo robot, Johnson & Johnson with Ottava, and a whole host of massive state-backed companies in China.
The era of the pure monopoly is technically over. The era of the competitive moat has begun.
And this is where the business strategy gets really, really ruthless. I want to talk about the Jazar.
The Jazar strategy is brilliant. It's a masterclass in defensive strategy.
So explain what this is. This is the refurbished version of the old model, the Da Vinci Chi-D.
Correct. So think about the life cycle of a robot. A top-tier academic hospital, let's say Mayo Clinic or Cleveland Clinic, they have the budget, they want the latest and greatest. They buy the new Da Vinci 5.
And they trade in their old Xi, just like you'd trade in a car when you buy a new one.
Exactly. Intuitive takes that 4-year-old Xi back to their facility. They take it apart, they clean it, they replace any worn parts, they update the software, and they certify it. Then they rebrand it, the IR. The R stands for refurbished.
Okay, so they have this inventory of perfectly good, slightly older robots. What do they do with them?
They sell it to the lower end of the market. They go to ambulatory surgery centers or ASCs. These are the outpatient clinics that do high-volume, lower-complexity surgeries.
Hernias, gallbladders.
Exactly. They also target community hospitals with smaller budgets or price-sensitive international markets in places like India or Brazil. And they say, look, you can't afford a $2 million DV5. We get it, but we can sell you this certified XIR for significantly less.
Why is that such a brilliant defensive move? Why not just let those lower-end markets buy a cheap competitor robot?
Because if a competitor, let's say a Chinese company selling a robot for $800,000, gets a foothold in those surgery centers, they start to build a user base. They start to get procedural data. They start to train their surgeons and their AI. It's the classic disruptive innovation theory from Clayton Christensen. You start at the bottom of the market and you work your way up.
So Intuitive is using the Azar to block the bottom rung of the ladder.
They are flooding the zone.
Yeah.
They are completely removing the price umbrella. They are saying to that surgery center, why would you buy a risky, unproven robot from some startup when you can have a certified Da Vinci, the global gold standard, for a similar price?
It suffocates the competition in the crib. It's ruthless. I love it.
It is ruthless, and it's incredibly effective. If the low-cost competitors can't get any volume in the simple, high-volume surgeries like the hernia repairs, they can't survive. They need that volume to train their algorithms, to get surgeon feedback, and to pay for their R&D. By blocking them with the XIR, Intuitive starves them of oxygen.
And I'm guessing there's a recurring revenue angle here, too.
Oh, you better believe it. This is the most beautiful part. Even though the XIR system is sold for a cheaper price, it uses the exact same instruments and accessories.
Oh, of course, the $1,850 per procedure.
Exactly. Intuitive doesn't really care if the hospital is using a brand new DV5 at Mayo Clinic or a refurbished AR at a strip mall surgery center. Either way, they're buying the same high-margin scissors and staplers from Intuitive. It's all about growing that installed base to drive the consumables.
There is one more layer to this defensive moat, and that's the digital pivot. We mentioned the digital ecosystem. I saw something in the earnings call about my Intuitive Plus moving to a subscription model.
This is the final lock on the gate. This is the Netflixification of surgery.
Explain that phrase.
For years, Intuitive gave away the software and data tools. You could log into the My Intuitive app and see how long your case took, or use the simulator to practice suturing. It was a value add. Buy our robot, and you get this app for free.
A nice little bonus.
And now, starting in the second quarter of 2026, it becomes a paid subscription service.
So hospitals have to pay a monthly or annual fee just to see their own surgical data.
Yes, and they will pay it without question.
Yep.
Because the data and the tools are becoming essential. My Intuitive doesn't just show you your case time. It tracks every movement the surgeon makes. It can use AI to tell you, hey, Dr. Smith, you are using 20% more unnecessary clutch movements than your peers. Here is a simulation module to help you fix that.
So it's a personalized coaching and analytics platform.
It's analytics, it's telepresence, allowing an expert proctor to watch your surgery remotely and draw on your screen. It's a video library of best practices. Once a hospital integrates that into their credentialing process and their surgeon training programs, they can't turn it off. It becomes critical infrastructure.
And software margins are even better than instrument margins.
Much, much better. It's almost pure profit. And it creates incredibly high switching costs. If a hospital decided to switch to a competitor's robot, they would lose all that historical performance data. They'd lose the training platform. It makes the walled garden that much higher.
So financially, this company seems absolutely bulletproof. Let's look at the balance sheet. This is our fifth section.
Pristine is the word that I keep coming back to. It's almost boringly perfect.
They ended 2025 with $9 billion in cash and investments. And the key part, zero debt.
Zero debt. In a world where interest rates are still a factor, having no debt is a legitimate superpower. It gives them so much flexibility.
What do they do with the $9 billion in cash? Do they buy a smaller company?
They could. But Intuitive has been historically very, very conservative with M&A. They prefer to build their technology in-house. That cash is a strategic weapon. It's a buffer. It means they can build new factories to ramp up DV5 production without borrowing money. It means they can weather a major recession. It means they can invest in moonshot R&D projects that might not pay off for 10 years.
And the top line is impressive. 2025 revenue crossed $10 billion for the first time, 19% procedure growth globally. It's an absolute beast.
It is. But, and you knew there was a but coming.
There's always a but. The bear case.
We have to look at the guidance. The market is a forward-looking machine. It doesn't care about last year's 19% growth. It cares about next year. And the 2026 outlook was described by management as measured.
They are forecasting 13–15% procedure growth for 2026, which compared to 19% is a slowdown. It's a deceleration.
It is a deceleration. And we need to unpack why, because there are two big headwinds that people are genuinely worried about.
Let's start with the one that everyone talks about at dinner parties, Ozempic, the GLP-1 weight loss drugs.
Bariatric surgery, weight loss surgery, was a huge growth driver for Intuitive for a decade. It's a complex procedure, perfect for a robot.
But now a lot of patients are taking the shot instead of getting the surgery.
Exactly. Why go through a major operation to have your stomach stapled if you could take a weekly injection and lose a similar amount of weight? We are seeing bariatric surgery volumes flatten out or even decline in some regions. That is a real, tangible headwind.
Is it an existential threat to their growth? Or just a blip?
I don't think it's existential, but it's a reset. Some people argue that the drugs will actually increase the number of surgeries in the long run because they'll make obese patients healthier and thus better candidates for other procedures like knee replacements. But frankly, for the next few years, the bariatric boom is over. Intuitive has to find that growth elsewhere in hernia, colorectal, and especially the new platforms like Ion.
And the second headwind, the geopolitical one, China.
This is the one that actually keeps me up at night if I were an ISRG shareholder.
Why? Intuitive has a big presence in China. It's a huge market for them.
They do, but the entire environment there is changing, and it's changing fast. First, you have these so-called corruption crackdowns in the healthcare sector, which sounds good on the surface, but in practice, it means hospital administrators are terrified to sign big contracts for expensive foreign equipment. Capital budgets are basically frozen.
And then you have the buy local pressure from the government.
Exactly. Provincial tenders, which are basically big government contracts to supply hospitals, are increasingly and explicitly favoring domestic Chinese robot companies.
And these domestic robots, are they any good? Are they a real threat?
They are getting there. 5 years ago. No, they were considered knockoffs. Today, they're good enough for a lot of the less complex procedures. And here's the kicker. They are being sold for about 30% less than a Da Vinci.
So if the Chinese government decides we are going to support our national champions and effectively ban foreign robots, Intuitive could lose a massive high-growth market overnight.
It's a very real binary risk. It probably won't happen that dramatically, but the trend line is clear. China is moving towards self-sufficiency in critical technologies, and medical devices are on that list. Intuitive is trying to counter this by building a manufacturing facility in China, their in China for China strategy, to try and be considered a local player. But it's a very delicate dance.
And of course, we have to talk about the valuation, the stock itself. It's trading at a forward price-to-earnings ratio of around 66x.
Which is, I mean, that is nosebleed territory. That is priced for absolute perfection.
It's priced like a high-flying software company like NVIDIA, but it's a medical device company at its core.
Right. And what that means is if growth slips, if that 13–15% guidance for 2026 turns out to be only 10% because of China or GLP-1s, and look out below, the multiple on the stock will compress violently. The stock could drop 20–30% on a single bad earnings report. There is no margin for error.
And we have tariffs coming down the pipe in 2026 as well.
Yeah, that's a smaller issue, but it's a direct hit to the bottom line. They said it's expected to pressure their gross margin by about 1.2%. It's not fatal, but it's annoying. It just eats into the profit.
So, okay, it's not a risk-free bet. You have the China risk, the GLP-1 risk, and the valuation risk. A tough trifecta.
Absolutely. But you have to weigh that against the sheer dominance of the competitive position.
Which brings us to our final verdict. How do we sum all this up? We called this episode The Monopoly Compounder. Does that title still hold up?
I think it does. I think that title stands. When you synthesize all of this, you see a company that is aggressively in an investment phase to secure its future. They are not sitting back and milking the cash cow. They are not resting on their laurels.
They're spending money to make money. Ramping up DV5 manufacturing, which is expensive, building out the digital ecosystem.
And they have such a clear roadmap for future growth. They have the DD5 for the high-end, complex procedures. They have the AIR to block the low-end competitors. They have ION to conquer the massive lung cancer market. And they have SP for all the new soft tissue applications.
Management said on the call that they have a line of sight to 9 million annual procedures.
Up from 3.1 million today. That is a tripling of the business, just with their current technology and indications. And the total addressable market is estimated at over 20 million procedures. So even at 9 million, they aren't even halfway there. The runway is still incredibly long.
So what's your bottom line on this? What's the final call?
My verdict is this. Risk defined. Portfolio protected. The risks in China and from GLP-1s are real and they are well defined. But the company is protected by its pristine balance sheet, its technological lead, and most importantly, that incredible recurring revenue business model that makes them so resilient. Even if China goes to zero tomorrow, this is still a powerhouse company.
I want to leave our listener with that provocative thought we touched on earlier, this idea of Intuitive as an oncology logistics company.
The time merchant.
Yes. If they succeed with their North Star vision for ION, if they can truly compress the diagnosis to treatment timeline for lung cancer from 200 days down to 20 days or even less, the value they're creating is just incalculable.
It is. We talk about ROI for hospitals in terms of dollars and cents.
Yeah.
But the ROI for the patient is measured in life.
Exactly. How much would you pay? How much is it worth to society to know you don't have cancer 180 days sooner, or to have it treated before it ever had a chance to spread?
You'd pay everything.
That is the ultimate power of this technology. It's not just about cool robot arms and haptics. It's about fundamentally changing the logistics of survival.
Beautifully put. A perfect place to end.
That was your deep dive into Intuitive Surgical.
Thanks for having me. It was a great discussion.
As you go about your week, think about that recurring revenue model. Is there a razor blade dynamic in your own industry that maybe you're missing? Or are you the one who's stuck buying the ink? Let us know. We'll catch you on the next deep dive.